Good evening, members and guests. This is the March meeting of the International Model Stock Investment Club. We are a Better Investing Model Club open to the public. A model club's primary role is to be a learning lab for attendees to learn both better investing principles of fundamental stock analysis using the stock selection guide, and to learn how an investment club operates. So all of our meetings are held on the third Monday of each month at this time, the exception being December, when we meet on the second Monday of the month because of the holidays. All our meetings and stock studies are held online, allowing us to have members and guests from around the world. Our current members are from the United States, Canada, and China. Guests, welcome, and as observers, you're going to be muted during the meeting, but we'll have an opportunity at the end to ask questions and give us any comments or feedback you may have. Just want to mention that any companies we talk about today are for educational purposes only and are not intended to be a recommendation for buying or selling any stocks. We ask that you conduct your own review and analysis of any company of interest before making an investment decision. This meeting may mention products or services not endorsed by Better Investing or our club. The views expressed are those of our members and do not necessarily represent those of Better Investing. This meeting will be recorded and will be posted to our YouTube channel for future use. So with that, I would like to pass it over to Tom Jones for the Treasurer's Report. Tom?
Okay, thank you, Henny. I think there's a mistake or correction here on the I'm prepared to present BioMarin, which I'm following now, and Jane is presenting Vertex. So, okay. And I don't know what Reddy's doing, but that's.
Tom, I'm analyzing. I'm following IAPR.
Okay. Okay. Very good. Okay. So here's the Treasurer's Report. Let me see if I can get this going here. Did I accept it?
Yes, we can see your screen.
Okay.
You can just hit F5.
F5?
F5, yes.
Okay. Thank you. I was having trouble finding the button. Okay. Here is the portfolio gain and loss statement. These are current stocks. We're underwater on a few of them, like BioMarin, Franco-Nevada, Kirkland Gold, and Qualis and Vertex. Biggest winner is at this point is Schwab, which is that's pretty large gain.
IIPR as well as it's quite big, 88%.
That's definitely true. I don't know why page down didn't work, but so this is the one month return. We've had certainly mixed results. Air Lease is up 20%. Innovative Industrial is down 12. You know, quite a difference over the past year. Which, you know, this month marks the, you know, the market hit its low and then it rebounded. So these figures are just out of sight. The yearly gains depends on how far the stock fell and then how far it rose over the year. So IPR is 200% gain, and I guess BioMarin is flat. So it's just Disney's up over 100%. These in the red box underperformed the S&P by 20%, but I don't think we can really go by this since of the crash. Here's the sectors over the past month and the past year. Energy was the best over the past year and over the past month. I guess energy dove the furthest, and then it's recovering. So this is interesting, I guess. Here's the 12-month compared to the 5-year. So energy is the best over the last 12 months, but over the past 5 years, it's only up 1.36%, which that's a little surprising to me, but that's what it has been. Communications doesn't show here because they've only got like about a 2.5-year history. They redid the sectors, so that's a new sector. I guess in the middle of 18 they created that. And here's
these sectors. Sorry, Tom. These sectors are from Morningstar.
Yes.
Okay.
These are the Morningstar sectors, right? Well, I'm not sure. I think these are whatever S&P ETFs. So
okay.
I can't be certain about that. So here's just to give you an idea here, like how far the market dove back last March is just if we look at a 5-year chart, it is really really something dramatic. So here's the sectors rank by 12-month return, and here's the amounts that our club has in each one. We have the most in communications. We don't have anything in consumer discretionary or energy.
I thought we had energy. Maybe we sold it. Did we? I thought we had energy.
We have a utility.
Energy?
I think
Algonquin is a utility.
Okay.
Energy would be like a
CSIQ.
oil company or something like that.
Was the CSIQ energy? Canada, the one that we sold.
Canadian Solar?
Yes.
Yeah, I think it would probably be energy. Here is the portfolio stocks. This is what the potential return is for. This is manifest data. They're saying the average is about 5% of the stocks they cover. So these here in the red box, they're projecting will underperform the market. And of course, they're the ones up on top, or the green is 5 to 10% above the market or the universe they cover, and the ones in the yellow that's the cautionary zone. Those are projected higher than the market. Here's the ranks of the stocks by Morningstar fair value. So they think, I guess BioMarin, Facebook, and Vertex are maybe somewhat undervalued, and then the ones down here at the bottom, from Fleacore, Qualys, Disney, and Schwab, possibly overvalued. This is the portfolio breakdown by size. We got 15 small, 23 mid, 30 large and mega, 31% cash. And here's the various sectors by these are Morningstar sectors. Good question on those indexes. I'm not sure. I don't value lines. Value line and Morningstar make those sectors different. So good question. So anyway, this is what we've got. And people, we saw these are the companies within it, but you've seen these numbers before on that sector performance chart, and so that's I'll post the rest of the treasurer's report online. It's just kind of a brief, this kind of a synopsis here to in the interest of time. Are there any questions?
one question that comes to mind is if you go back to the slide with this one, the Morningstar price to fair value.
Yes.
And then if we looked at the recommended buys, there's a bit of a disconnect. So for example, Disney is 28% overvalued, but we're presenting it today as a buy. So I'm not sure if people are looking at this fair value when they make the buy hold recommendations, but that's something that we should maybe talk about later on when we present these.
Okay, let's see what and also Manifest has it ranked here to underperform.
Right.
So there's agreement there anyway. I don't know about anything else. Any other questions? Okay, well,
Different,
I guess
but what I can't. Oh, can this is Tom?
yes,
In the club. Can you hear me?
I can hear you.
Hello.
I can hear you, Bernard.
Okay. Well, anyhow. Okay, thank you. When I was listening the other day to this Catherine Woods, and she's, as I understood, and maybe I misunderstood her, but that the different companies are working across sectors quite a bit, more and more. And I don't know if that, so that maybe sectors will lose some of their significance. I don't know if you have any thought about that, or I just thanks for listening.
I don't even know what that term means.
Well, it's Kathy Wood. She's the ARK investor.
I know who she is, but I don't know that.
So
term.
I think what Bernard, what you're referring to is if you look at companies like Tesla, for example, they're more than an auto company. They're developing software, autonomous vehicles, tunnels, energy. So they span multiple sectors. I think that's what she's getting at. But I think the ones that we follow here are pretty firm.
Okay, like GE used to have power equipment and then financial. So yeah,
exactly.
Okay.
Yeah.
Okay. Okay, so you guys can.
I have one comment, Tom.
Yes.
Disney being in the bottom, towards the bottom of the list. I'm reading good reports on Disney lately. I'm surprised. If we are going only by Morningstar, okay, I'm not sure if that's the right approach, but that's my just comment, one comment.
Okay, well, it has to deal with the stock price probably. The stock price is way up, and they think that at this price, they're not saying Disney doesn't have a good future, but they think the stock may be overvalued at this point.
Yeah.
Maybe.
Yeah.
It may grow into its valuation.
Yeah, lately I'm reading good reports on that.
Yeah.
Okay. I think we should probably.
But it's overvalued. Yeah. Thanks, Tom.
You're welcome.
Thanks, Tom.
You're welcome.
Okay. So then the next item on the agenda is we don't have an education topic today or any stock studies because we have a number of reports. So now, before we get into these reports, Tom Loftus, are you? Do you want to? Were you planning on going through the Pert Report, or is Tom Loftus here?
Yeah, just gotta turn my mic on now. Yep, I could do the Pert Report now.
Okay. Should we? I guess we can do that. Then we'll do the individual reports after. So, Jay, could you give Tom the screen, if you don't mind, please? There we go.
So you guys see my screen?
Yes.
Just wanted to move.
Hit F5, or no?
Yeah,
this is not a PowerPoint. Okay.
Okay, so just for background for the audience, we're going to do portfolio review. It's part of Mike Torben's manual stock selection guide, portfolio management magic. Is part he's part of the Puget Sound chapter, and it's under the Washington states, and he has these references under. If you go to the Better Investing site for Puget Sound, you can find these different references, the manual with a link, portfolio template that we're going to use for portfolio review, and then he has recordings and also of different education around the stock selection guide and portfolio management. Okay, so the portfolio review is screens performed on 3 reports from Better Investing, SSG, and the iClub performance report. So the first part of the report is sections on diversification, section A. They're going to be a little bit different than Tom's, some of the information Tom had, but it's, again, depends on how the different groups slice and dice their sectors.
Tom, your mic has got a bit of a background noise on it. I don't know if there's any adjustments you can make, or is it just...
Is that better?
Why is this not good?
I think so. Well,
okay. It was flopping around maybe. Okay, so the fourth part is the performance part, and it's done from the iClub performance report. So recommendations that we're going to make at the end of this review are that to review purchasing some high growth stocks with our excess cash, and consider selling Air Lease and Fleacore.
There's still quite a bit of background.
Okay, I could try I could try getting on another computer. Or try without this mic. So is that better?
that's okay. Go ahead, because of time, but you might want to check your mic
Okay.
after.
So this is the portfolio review sheet. I was looking for my Pert, but I think you guys know what the Pert looks like. So again, Tom talked about these diversification. We pretty well meet the diversification, 24 versus 25, 31 versus 50 for the medium, and 44 versus 25. So we're a little of the suggested, we're under for the medium size. The estimated growth is 13.3, made up of 12.8, and for the return, the stock return, and then 0.5% for dividends. So the number of stocks.
Sorry, just for the benefit of people that might not be familiar with this, Tom, the estimated earnings per share growth rate is the median of for all the stocks in the portfolio, correct?
Yes.
Okay, so we we do updated SSGs and then make recommendations for growth and so on. And those, you take the median number, and that's the okay.
So this is the total return. It's the median of the total return, and then it's the dividend is over here, and it's the median of those dividends.
So at some point in the future, we might want to just compare these growth rates with what Tom was showing on the manifest par. I know that we had a vote and we decided to use Mike Torbinson's methodology, but it'd be interesting maybe to have a conversation with Mark Robinson and just see why there's a big difference between the two.
Right. So yeah, if this is introduced in this report, Tom and I should probably get together and just look at some overlap that we're doing, and then maybe some inconsistencies so that we could explain it to everybody. But,
so is median is median average or something else?
No,
the midpoint.
Midpoint. Okay, all right.
So there's 15 stocks. When you count down to the 8th stock, that's your median. And then you sort it the same way for your dividend and whatever your 8th stock is for dividends on the dividend sort, that's your median.
Okay, thank you.
In difference to whenever we talk about the portfolio return here, it's 8.6. This is each, projecting each stock with whatever weighting it has in the portfolio.
Yeah, so I'm not too. I think there might be a better way. I don't know. Maybe I'm wrong, but if you take the projected total return for each stock and put a weighting factor in based on how much the percent of that in the portfolio, and then you average those out, so it's a weighted average. That would give you a more maybe realistic.
Well, that's just 8.6. That's provided on the summary report from the BetterInvesting. This, I think, what this is sort of a historical thing, in that the way they initially did this report, I think, is they looked for stocks that had 10% return or greater, and then they did this manual value review, and they did consider the other stocks. If you had a stock that had greater than 10%, but maybe had some other, it met some other screen, you didn't worry about it. I think that's where the historically where it came from.
Okay.
But so I think what they're suggesting is you have more than 3 sectors. We got 9 sectors, and they look at your biggest sector being less than 30%, and that's communication services, as Tom was saying, we're at around 23%. And then they look at you having 15 to 25 stocks. We got 15, and not having a stock greater than 20. Facebook is at 10.5%. And then they look at us having less than 5% cash. We have 29.6% cash, which is probably, as far as diversification, is the biggest issue that we have. So it's recommended, that we look at buying some more mid-sized stocks and reduce our cash. So these stocks now have, in the section B for quality, they've missed their 12-month return for EPS. They've missed the estimates that we gave them. So there's Domino Pizza, Indigo, Inogen, Air Lease, Comcast, Fleacore, Disney, Schwab, and BioMarin. So I think each of these are going to be talked about tonight, and except for Comcast. So I'll just leave that. So on the value on the buy side, the those stocks with greater than 10%, these stocks all met that screen. Projected PE at or near the low. These two met that screen, and then the screen for the PEG less than 1.5, relative value less than 100, and upside downside greater than 3. Kirkland Lake was the only one that had that, and none of the stocks met all 3 screens on the buy side. So on the sell side, these stocks, again, we're more or less talking about these stocks up here that have trouble. So these stocks were less than 10% return. The projected PE are near the highs for these guys. PEG greater than 1.5, relative value greater than 100, and upside downside less than 3 for these. And then Fleacore and Air Lease have got caught by all those screens. So that they're recommended to consider selling, or talk to this stock renter and look for what their thoughts are, and then come to an agreement on the way forward. So where have we been? So our winners, and again, this winners, something maybe Hanny and I should have talked about before, but this is the total portfolio, like all the buy and sells that are in the on the iClub thing. It's probably more practical to look at the last couple of years or the last year, where it's 2 to 7. So we have a much better average. We have about a 70% average there, rather than this 42. The total return we talked about before, and then lifetime versus the Vanguard were 14.6 or 0.06 versus 14.9. For the 3-year, 19.41 versus 15.68, and then the Vanguard 1 year, slightly less than 21 versus the 23. We'll beat the 15. And so to improve our score, we could look at any item here to sell with less opportunity, and then look at some improved opportunities. So reviewing the purchase of high growth stocks with their excess cash, and then considering Air Lease and Fleacore's potential. Any questions on the portfolio review?
Well, just a couple of comments. One, I think, given the return is actually pretty good, given that we have 30% cash. So and we've had a lot of cash for a long time. So we find, we're not finding stocks to buy that are worth buying, I guess. So maybe we want to relax our criteria a little bit. And then the other comment I have is just on these, if you can scroll down just a little bit to the C and D, or sorry, C mostly, the buy low, sell high. Just wanted to thank Reddy for, he did a modification to the spreadsheet that we were using to automate these conditions so that we don't have to go through and do it. So just wanted to recognize Reddy for doing that. Much appreciated. Okay.
Well, there was a form here, Tom. There was a form you had earlier. It looked like the old PERT chart that you could do with Toolkit, and it highlights problem areas with pink.
Yeah,
I wish you'd show that form. I thought that longer. There it is. That's it. I think this is a real neat form that you can go through where the colored areas are and investigate. And the yellow areas are tend to be overpriced, and you can see if they're really. You can investigate any area that's highlighted. I find this PERT chart is fabulous, and it's helped me a couple of times. And well, anyhow, thanks for showing it. Thank you very much.
Bernard, that's what we use for this portfolio review sheet. So we start out with that PERT form, which comes out of when Tom did the when everybody did their SSGs, updated them. So he put that into a portfolio on the Better Investing site, and then this report was generated, and then he used this and summarized all of this pink and yellow and so on that sheet he was just going through.
Okay, thanks, Haley.
Okay, thanks very much, Tom. And up next is Jay. Would you mind if I got the screen back? Let's go through the agenda very quickly just to see who. Show my screen. Okay, so first, did we want to go through all of these or just go through the buys and the sells?
We can prioritize do the buy first.
Usually
Okay.
we go through, if it's an annual report, we go through it even if it's a hold. But I would go through the buys and
Okay.
sells first, and
The
then
majority are annual reports except for Disney.
okay.
So okay.
And Disney's a buy, so we would go through that anyway. Yeah.
Okay, so let's go through Vertex first, just in the order here.
Okay.
So Tom Jones.
Okay.
Jane is covering Vertex.
Oh, Jane. Okay.
Oh, we switched. Okay.
Yes.
I switch.
Oh, Tom is a co-follow Vertex, right?
Yeah, that's right.
Okay. Peer review, sorry. Me.
Yeah. So can you see my screen?
Yes.
Yes.
Okay. All right. Okay, Vertex, we purchased last month at the price of $226 or about $2,000. And so the price today is dropped to 219, about 220. So this company is a biotechnology company, and it has a lot of potential. And we covered last year as a stock study company, and this month we have the annual report issue. The 52-week high is in July, $306. And this company, as you can see, the revenue last year is 1.4 billion, and this year is 1.6 billion. So it's steadily increasing. So I use 15% as a projected revenue growth rate. And the total current assets and the current liability, the current ratio is very healthy. It's at 4.3 this year and increased from 3.6 from last year. And it has a healthy cash flow, and free cash flow is about 3.2 million this year. Last year is 1.5 million. So everything is going well.
Jane, sorry, you cut out. You said everything is going well, then I didn't hear anything after that. Can't hear you. Joanne, can you hear Jane, or is it just me, or?
No,
No,
I can't.
I can't
Jane,
hear.
we
I can't hear anything. It looks like she still has control of the screen, but we can't hear the audio.
Maybe she, yeah.
Maybe we should move on to another person, and then maybe she can
And
restart.
last,
Oh, there she is.
pardon me?
You
We
were.
couldn't-
Oh, yeah.
We couldn't hear you.
How come?
I don't know. You went silent after you started talking about free cash flow, and then it went silent.
Oh, okay. So should I start again? Okay. For
Just from the free cash flow.
okay, the free cash flow is very healthy. As you can see, it's 3.2 million this year. Last increase from 1.6 million last year. And the historically sales growth rate is very healthy. For the past 10 years, it's about 20%. For past 5 years, it's about 36%. This quarter is 15%. Trailing 4 quarters is 49%. Last month, when we did the stat study, we used 25%. But this month, I used 15% just to be conservative. And the earnings is also very healthy. For the past 10 years, it's about 169%. For past 5 years, it's about 600%. And this quarter, again, is slightly, not slightly, it's declining to 3.1, but for the 4 quarters, trailing 4 quarters, it's about 128%. So last month, when we did the stat study, we used 70% earning growth rate, but this month I use 9.7% just to be conservative. Even with that conservative figures, we have SSG done here. I want to show you here. And even with this 15% and 9.7% earning growth rate, and as you can see, the pre-tax profit on sales is increasing on the uptrend, even though this quarter is slightly, not slightly, it's declined this quarter. But then the return on equity is also on the uptrend, and the debt to capital ratio is on the downtrend, which is all very healthy. And so when I did the SHG, I cross out the outliers for the 2016 and 2017. Based on 15% sales revenue growth rate and the 9.7 earnings growth rate, I have derived a upside and downside ratio 11.3%, 11.3 to 1 ratio, and the estimated annual return based on the average PE is about 13.3%. Based on the high PE estimate is about 18%. And this is based on my high price of 490. How did I derive that? I used $30 as an average high PE. So why did I use 30? Because even though the average for the past 5 years is about 34, but I used 30 because I used the most current years, which is lower, so I used 30. And the estimated earning is based on this 2020, the ratio, and times 1.097%. That's the 9.7 earning ratio I use to arrive at this $16. So, and the low price I estimated based on the average low PE, which is 19 for this year. Again, I don't use the average because I want to be more prudent, so I use 19. And then I use the current ratio, the current earnings for the base, and that's how I got the low price. So based on the low and high price, we have this 11.3 to 1 upside and downside ratio. and the average return is 13.3% to 18%. So based on that, and not only based on that, we look at the pipeline of this company. I think last month we have covered Vertex, and we have already gone through. I think not only this. Let me see. We have gone through the pipeline. As you all know, it has a very healthy pipeline. Has a lot of besides their specialty of cystic fibrosis, they are also having a broad pipeline of potentially transformative small molecule cell and genetic therapies. All these potential products are aimed at serious diseases, such as all this you can see on the screen, including type 1 diabetes. So even though we all know from the earnings release and from the management call, Vertex top and bottom line gains are likely to moderate from next year on, from this year on, 2021 onward, because no major regulatory filings are on tap for now. So even though they are still progressing, they are on a broad pipeline, but then no immediate filings are on tap for now. But for long-term upside potential is wide at the current price level. So this is a week ago today is about $220. But even with that, the earnings is it's between 13 and 18%, based on the high and average PE. So I recommend a buy, and it's a very healthy company and with a good potential at this price level of 220. This is last month, about last week. So today is 220. And if you look at this, if you look at the value line, and I think it validate our recommendation. I don't know how to get this.
You want to make it bigger, Jane?
Yeah, I want to make it bigger. So
go
I
to
don't
the
know.
top where it says 100% at the top.
Oh, yes.
Plus.
Yeah. Thank you. Yes. Yeah. If you look at the value line and okay. Technical wise, it may not be very timely, as you can see, but then financial strength is really top of the quality. And if you look at the detailed report, that 2021 is going to grow at a healthy rate, and it's 11.2 from 10.2. And so as the management acknowledge 2021, and it will be moderating, the growth will be moderating. However, the potential long-term return is feasible. So okay. Vertex, according to value line, Vertex is under pressure now, but then it's still with a good potential long-term wise. So I recommend a buy on this company.
I have a question, Jane. So the earnings, if the earnings, the last year earnings were over doubled compared to previous years, do you know why it jumped so much? What happened last year, 2020? You can either go to SSG or go to value line. Yeah. Maybe just go to SSG, the first page, the cover.
Okay. The SSG. Yeah.
The first page. Yeah.
First page. Okay.
Yeah.
I think if I remember,
what happened?
If I remember correctly, the CF, this earnings, it's also because of sales. CF, cystic fibrosis, These products, they have a new launches for this particular product, and they have launched not only in US but also in Canada, I believe. And also these products, the new drugs in CF, have generated a lot of sales, and they have spent these products to different ages of the population. So that's why they have a big increase in sales, and that lead to a big increase in the earnings. And this product is not only product that they are developing, and they have other products, as I mentioned earlier, and we get it last month. And I'm sure Tom has some other feedback. Tom?
Joanne, I have a comment.
Sure. Ready?
What Jane presented, it confirms my last month's research.
Yeah.
Basically, Vertex is cashing on all their years of research for last 3 years, and their expertise is disease modifying drugs. Okay, and they have no competition in the entire world about because they are highly patented inside research, highly patented. Okay, the only competition that can come to Vertex is if somebody comes up with a genetically modified cure. Okay, so those two are completely different technology. I think for next few years, Vertex has a very good future.
Yeah.
Because they are completely protected by the patents, and nobody can copy.
When does the patent expire?
Huh?
Do you know?
What's that?
When does the patent expire? How long?
Typically 17 years, and they have many more years to go, because it's completely internal research, not from any outside collaborations. Now they are started collaborating. Okay, so all the past research was internal research, and the internal research patents are well protected. So existing research, yes, the only competition is from new technology that's called a genetically modifications, which is kind of a personal each individual case.
Yeah, when Reddy recommended to buy this company last month, he used 17% as an earning growth rate, and I already declined to 9.7%, and we still get the 11-to-1 upside and downside ratio with a 13 to 18% growth rate.
Yeah, one more comment I have to make is I have a couple of biotech researchers in the drug line research. By definition, biotechs are extremely volatile. Okay, any one small positive news, it goes up. Okay, one negative news, it goes not by themselves, even by the competition. Okay, so from that sense, what Jane is confirming is my research last month.
Yep.
Okay. So I see they have. Oh, go ahead, Jane.
They have
I think I'm a little more skeptical. They're doing well on their cystic fibrosis drugs, and they do. Their newest one does have several years of patent left on it. They're expanding the use, but I'm concerned about their pipeline. They don't have any things that are looking real promising. That's why the stock price is down. So if they're going to be successful long term, they're going to need to get have some success in their pipeline. That's what these companies.
Tom,
I was just going to say, because I'm looking at their website, they have 4 things in phase 4 right now. But other than that, rest of them all in trial 2, phase 2. Phase 2 meaning trial 2, right, Tom?
Well, but they had something fail, I think, recently. You know, the price would be much higher if the market thought they had something promising in the near future.
Tom, what happened last October is they have a parallel trials for same disease One did not work out, they dropped it, and that negatively reacted in October, and the fall for the price. Okay, but they are continuing with the second one, their alternate option.
But if
So
you
that's
read
a
the
temporary.
current, if you read the current value line, it also kind of confirms that there is no major regulatory filings on top for now, in addition to the mid study that failed. So I think there is something with the pipeline not being as good as investors want, right? But it's
So
still probably for
I think
existing drugs, they still have a runway there.
I have a question for Tom, the pharmacist. So Tom, I'm looking at their drugs. They are phase 4. Does that phase 4 meaning that they're already in production, like launched, like
Yeah.
trial,
You know,
completed
I don't
trial,
even
right?
know what phase 4 is.
Okay,
Phase 3 is the last phase of clinical trials. I
okay,
don't know what phase 4 is.
okay. So I'm
I can
looking
look
at
it
their
up, but
pipeline. They have 4 things of phase 4, the drugs that you guys just talked about. Other than that, the rest of them are in phase 2. So nothing in phase 3. Maybe that was aligned to what Tom was talking about.
I'm not too familiar with that, but phase 3 is the final one, and that's approval, right?
Right. Right. There's only
You're
3
not
phases.
showing on their website. I'm looking at the company's website.
So you may consider phase 4 probably it's already production.
I
I never,
I want to know.
uh, uh,
I
That was
uh,
my
never heard
question.
I never heard of phase 4 for
well,
pharmaceutical.
according to Google here, phase 3 is clinical research. Phase 4 is FDA review. So I guess
Oh,
it's
okay.
been submitted for by this definition. I didn't really dig into Vertex.
Mm.
But it looks like if they had several things under FDA review pending approval, that would certainly be news.
I would think the price is pressured because of the last October failure. And they do have a lot of things in pipeline in phase 4, as Jay rightly mentioned. And also they spend tons of money on research and development from last month's study. If I remember correctly, they spend like 40% of their sales revenue on the research. Is it right, Reddy?
No, they spend significant amount of the revenue on research.
Exactly. I think it's like 40% of their sales on revenue on the research and development. Is it?
Yeah, I don't remember the exact figure, but
Yeah, I think it's an
very high,
outrageous number.
ratio,
Yeah,
very high ratio. But
exactly.
that's their strength, because they were all internal research.
Okay,
Sorry.
I just
Yep.
found something here on phase 4 that I think is important. It says phase 4 is for drugs that are already approved, but that the FDA is still monitoring them for several years to monitor safety and efficacy. So this is
Yeah.
drugs that are
Yeah.
already
And
already on the market. They're already generating revenue, but the FDA is following them just to make sure everything's okay. So
Yeah.
phase 3 are
Okay.
the ones that they're getting, after it passes 3, then it can go to FDA for approval. So they don't, if they're still in phase 2, they don't have any phase 3.
Mm,
Phase 3 trials take a few years.
mm.
So I'm, that confirms my skepticism.
Yeah. So
I
Jane, I'm
would
sorry,
say
I
at
took
that
your
time, I
screen.
don't want to be a
If you look,
timekeeper, but we're gonna spend too much time on one review.
Yep.
yeah, wait, I know. Sorry, I took a screen on Jane. I just want to show you. These are phase 4. I suppose these are the drugs that you guys just mentioned. But
Right,
other
those
than
are
that,
already
nothing
used.
else.
Yeah.
Yeah. So, okay, that's all. So who's next?
Okay.
Thank you, Jane.
You're welcome.
That's good.
Did we have reviewer for it or no?
I know. So who's next?
Okay, Tom Jones was a peer review, so we got his feedback. We have Schwab, which is, I think we should also make sure we do Air Lease and is it Fleacore that were the recommended sells, even though they're saying hold? We need to look at those.
Good idea.
Do you want to? Okay. But my issue with selling is that we should, because we have so much cash, we need to be also looking at buys. So maybe we should be looking at our buys and then looking at our sells. What does everybody think?
Let's go to next buy.
Okay, let's go to BioMarin. Ready?
Yeah, I think that's a good idea.
Okay, so I guess give me the screen.
Okay.
No, it's ready. Isn't it ready, the BioMarin?
It's
No,
me.
Tom.
Oh, it's you.
Tom.
Okay. Oh, ready
I'm
is
a
the,
peer reviewer.
oh, okay.
Okay, so here we go. BioMarin is a speculative company. They are not making any money. They don't even have positive free cash flow. They've got positive operating cash flow, but when they do any capital expenditures, then that wipes out their free cash flow. So the free cash flow is negative. I don't know if this is big enough for everybody to see. I can probably
Yes,
make it.
it's good.
It's good.
Okay. So their sales have been growing. They've got several products on the market. The guidance I could find, the company guided to 9% revenue growth and continued positive operating cash flows for next year. Some, like Morningstar, some analysts were more positive on the growth, but I just don't know. So here's if I'll show you this a little bit later on here. They by GAAP measurements, they made money the third quarter last year, but the only way they got a huge tax benefit, close to $1 billion by transferring intellectual property to their Irish subsidiary last fall. So I don't know exactly why this would happen. The only thing I didn't really investigate why, but I know that I think like Google and Apple have been criticized by people for holding intellectual property in Ireland or someplace like that, and then they're able to do tax dodges. They're able to not pay taxes. But since this company isn't profitable, I can't see why that's a problem. But maybe they're planning for the future. One of their drugs, this PKU drug, this Kuvan, has started facing generic competition in the U.S. last fall, and its sales are down 20%. They're hoping they've got a couple drugs. They've got them. They've got for approval in Europe. So they're hoping to launch this hemophilia drug in the fall of 2022. They thought there was hope they were going to get it approved in the U.S. last fall, but the FDA says, look, we want 2 more years of data. They want to make sure that the response is permanent or lasts longer. So they got to wait 2 more years for the FDA. They've submitted some data, and so I don't know if that can be hurried up or not, but they possibly have an approval there, and they're hoping to approve this drug for this bones don't join together right, causes dwarfism for this however you say that. This drug here for achondroplasia. in Europe this fall, and they rely on insurance for governments paying very high prices for these drugs. You know, they're getting like $300,000 a year, so nobody could possibly afford them. So they got to have the insurance companies and governments pay for these drugs, and their future success is going to depend on commercialization of these drugs. So I'm suggesting a speculative buy because they have, you know, the price is down, and you know, they do have some hope that they're going to get a couple of approvals in the next year or two. But I don't, you know, the market isn't favoring them right this minute. So here I wanted to show this, you know, the data, annual data here. I guess we got to go bigger to anybody to see it probably. So this is from the stock selection guide. You know, 2020 showing 453 earnings last year and 401 in that quarter because of that tax benefit. So on the stock selection guide I did, which, you know, it doesn't really, it's kind of meaningless to look at it. If they don't have any earnings, you can't make any projections by our methodology. So I just, you know, I guess that quarter was a negative 20 cents because the pre-tax profit was negative 61 cents. So anyway, I ended up by, you know, just making an adjustment to wipe that out. But, you know, I don't really know what that proves. Let's see, I can. So here is their stocks. Well, no, I'll do the adjusted one here. But see, this is their, you know, I guess the earnings. I don't know. I guess this is the 20 cents. You know, when you go down from negative to 20 cents, it looks like a huge accomplishment. But so anyway, that's, I don't really have anything else unless anybody has questions. Well, I guess we can move on then.
Hi, Tom.
Yes.
Tom, right? Hello.
Go ready.
I'm here.
Yeah. I went through your analysis. I agree everything. I think Biomarin is, I think, it's where Vertex was 4, 5, 6 years ago. It has a potential, but these all the biotechs we have to extremely watch and see how there are a number of phases, how they're successful. It could be a good company in the future, but I'm not sure right now. I think we have to watch it. That's my feeling.
Tom, I have a question.
Yes.
It looks like the stock price has pulled back from its high. What's the reason for that?
Well, they thought that the FDA was going to approve their hemophilia drug, or they had some potential for that. But last fall, the FDA said they wanted 2 more years of data, so they pushed it back.
Okay. And that affected the price.
Well, yes, because people were expecting a new drug, and now they're saying, well, maybe in 2 more years. The drug appears to be safe and effective, but they want to make sure that it lasts for a long time. I guess this is like, you know, it's a one-time treatment that allows the body to make this. I guess it's either factor 8 or factor 9 for blood clotting for people, hemophilia. So they want to make sure that this treatment has a durable effect.
Do we have any other speculative stocks in our portfolio?
I think that's the only one.
Can you guys hear me all right?
Yes.
Yes.
Okay, I got my GoToWebinar crashed, but I'm back. So you might consider Kirkland Lake and Franco, Nevada somewhat speculative. They're both good companies, but the price will follow the price of gold, and price of gold is bouncing all over the place. So I don't think the companies are speculative per se, but I think the price of gold is somewhat erratic.
I'm just wondering what percentage of our portfolio have, which stocks fall into that category, because we said we could go up to 10% of our portfolio in this category.
So BioMarin is only 1.1%, and if Vertex is 2.4.
Okay.
But I have a feeling you're asking this question only because you came in late.
What?
You just snuck into the class, Megumi. You snuck into the class. And you're trying
I was like 10 minutes late.
Did you bring a note?
What's that?
Did you bring a note?
Bring a note.
I did.
Okay.
From your mother?
My teacher.
Okay. Let's move on then. Thank you, Tom.
You're welcome.
I think
Disney?
let's do Disney next,
Okay,
Matt.
Okay.
Oops. Hey guys. Disney. So Disney had a good quarter, good bad quarter. I'm not sure which way you're supposed to say that. But so I did update the sales growth projections and the earnings per share. So started with the sales or revenue, and basically what I had done is broken out each segment separately, like Disney does in their earnings reports. So the estimated 2025 revenue, basically what I did was start with 2019, which was the last normal year. And I grew the revenue by 5%, which is just slightly below their kind of historic growth, which is 6.3%. So started with 5 for any segment of the business that didn't have like major changes, right? So should be fairly consistent from what 2019 ended. So media and linear networks, which is like ESPN, ABC, things like that. I did 5% growth from 2019, which gets to 36 billion in 2025 using that 5%. Parks, which is way down right now because a lot of the parks have been closed for 2020 and are still at least partially closed. I put 5% growth on their 2019 revenue, which gets to 32 billion by 2025. And then for studios, I assume the same 5%, which gets them 14 billion by 2025. And then last, kind of the big one, is a direct consumer. So using the numbers that Disney gives out for subscriber growth, so these are their targets in the any other positive, negative news. Today, they actually just crossed 100 million, they announced last week, I think it was. So, but at the time of the earnings report, they had just under 95 million with a target of 230 to 260 million subscribers for Disney Plus. They had just under 40 million for Hulu, and they're targeting 40 to 60 by 2025. And for ESPN, they're 12.1 million, which is already above their goal for 2025. So using these target numbers and where they're at today implies 200% growth. And they're growing at about 70 to 80% in the direct-to-consumer revenue right now. So 200% by 2025 gets you to $51 billion. When you add all those together, it gets to $133 billion. And then, so using this 133, that's effectively 14% growth from the trend, which I will show you right here. So looking at this trend, I did it from here as opposed to from the quarter because it doesn't make any sense starting with a negative. And from the trend is effectively what I did there with the estimating from 2019 revenue. So following this line gets us out to, well, 134 billion. I didn't do 13.9 or something. So using that, I then did the preferred procedure calculation on the earnings per share. So I plugged in the 14%. I did estimate, that the expenses or the pre-tax profit margin would increase slightly from 24.1 to 25 because the direct-to-consumer is a really high margin business. So I expect it to improve margins for Disney overall. Taxes, I estimated at 22, which is about the corporate tax rate. I think it's actually 21, but plus a little state tax and things like that. And then last, I probably should have updated this number here to 18. I don't know why it's this low. Let me plug this in. Well, that gets me to 10%. That gives me a 10% earnings growth. Let me go back here. So let's do this 10%. This will update all this. But just recapping the quarter, so it was really bad. 19% drop in sales due to negatives from parks and studios. 133% drop in pre-tax profit. 146% drop in earnings per share growth. It's just from everything being closed due to COVID. Continuing down, current PE, they don't have one since they've been negative for the last year. Average PE, 18.6. The upside downside will have updated to 1.7 to 1 now. And that gives us a compound return of 11.6. So given that, I probably will just put a hold on Disney instead of a buy. But that's effectively our report. Oh, I guess just the last key thing is so revenue. Most recent quarter was plus 2%, minus 53 for parks, minus 55 for studio, and plus 73 for direct to consumer, which is the driver. I mean, this is really what the story is. You know, they can add all these subscribers. At these levels, they'll become larger than Netflix, and they'll be the dominant company in streaming. So, and if you look at this, they kind of transform 51 billion makes direct to consumer by far the largest segment of Disney's business. Yeah, so I'll probably say, I mean, I would still probably buy this, but given the numbers, I would say hold instead. Any questions?
So Matt, just by changing that, what was it, the outstanding?
Shares outstanding. Yeah, I miss that every time.
It changes to a whole. Can we check? Let's see the diluted shares outstanding drop down on the right. On the right, yeah.
Yeah.
Okay.
So they issued a bunch to buy 21st Century Fox. I don't know why they never plugged in here.
Okay. Got it.
Yeah.
So Matt.
Yeah, that definitely updates it.
Yeah, you estimated DTC 200%, but the management is referring to 73%. There's a discrepancy.
No, that was the last quarter's year-over-year growth. 73%. So the 200% is over 5 years.
Okay, got it. Thank you.
Okay,
Mhm.
and then the analyst estimate is 32.6%. Is
Yeah.
that?
So I'm unclear on what this, if it comes from the quarter. So if you look here, right? So they have negative annual. So growing 32% from where they're at today, which was 2 cents per share. You could theoretically grow at 32% for 2 years because they're starting so negative. And I think that's where that comes from.
Okay, all right. Thank you.
Mm-hmm. So if you
So
look
they
at,
really have a negative 40% tax rate for last year? Does that mean they don't have to pay taxes at all because they lost so much money?
they did for 3 quarters, they've been negative. Yeah.
Hmm.
So they'll receive some sort of tax carry forward loss. But it's temporary, right? Like they're already making profit again, which you can see here.
Right.
So they had a pretty low, well, they come back to a normal tax rate now. They're pretty close.
You gave them 22, I think.
Yeah, I think that's like the corporate
Mm.
rate at this point.
Okay.
Go back to that.
Okay.
But that's it. That's all I got. I got a hold. But I mean, I still wouldn't be sad to buy it. It's not as good as it was. Because I think, over the long term, Disney, they're going to have much higher growth than probably people are used to. That's all.
Okay.
Okay, thank you.
Thank you.
Is it my turn?
I
Okay,
think so.
okay. Make myself presenter. Okay. Okay, so I actually had a hold on Algonquin, but I wanted to bring it to the club because it comes up as a buy in my SSG, and I want to explain why I have it as a hold. So Algonquin is a Canadian company, and we've actually bought it 4 times and made a profit on it. Its current price, well, that was as of 3/9 was $15, and we bought it at, $10, $11, $12. It's done well. I think I can't remember looking back at Tom Loftus, his report. I think Algonquin is kind of not one of the ones to sell, but it's not as profitable as it once was. I didn't change the estimates. They're still at 8%. The management is good, up, down. So I couldn't find any guidance in the annual report, so I used Zacks, and they're estimating it at 8 to 10% EPS growth. Let's see. Okay, so they do a lot of acquisitions, so they just completed a couple acquisitions, and they've got a pending acquisition coming on. And they actually were hit when Texas had that big storm or the freeze and everybody lost power. They were affected by that. So they're calling it the Midwest Extreme Weather Event, and had to recalculate some of their estimates. So I want to go through this quickly, but so SSG says buy, but I have concerns about them covering their ability to cover their debt and interest. So their debt is not well covered by their operating cash flow, and their interest payments on their debts are not well covered by their earnings before interest and taxes. So I have put it as a hold, and I'm going to show you the SSG. This is their SSG. It looks pretty good. Using the 8% estimates, holding to that, it comes up as a buy. So, and I think, what was the return on that? And it's got a healthy, I guess, annual rate of return, 24%, 25%.
And good dividend.
Oh yeah, and
Yeah,
dividends,
the
right?
utility,
Yeah,
it's all about
yeah,
dividends
yeah.
because it's not growing fast.
So, I don't know.
Does the
Do we want
company
to
give any
discuss?
guidance, Joanne?
No. Mm-mm.
Because I noticed that you gave 8%, like they are growth in double digits.
I have a
20,
question.
25, you gave 8%. I'm just curious.
Oh, well, on their Investor Day presentation, they forecasted their EPS growth at 8 to 10%.
Oh, okay. I
So
see.
for the next 5 years. So I went by their
That makes
Investor
sense.
Day presentation.
Mm.
Did you have a question, Jane?
Yeah, Joanne, can you look at the SSG again? You look at the low price, second page. The low price, you use average low price 19.7 and your average high price, PE is 18.
What am I looking at?
Your high price, you use average high PE is 18, right?
Oh, right
And
here.
the average low PE, you use 19.7.
I don't think she calculated it. She did not calculate. She selected.
Oh.
Can you click the B box? Yeah. Yeah, she did
Oh,
not
I
use
see.
calculated.
I see.
I use the price dividend will support. Does anybody have any insight into price dividend will support? I just always use that when there's a dividend. Is there a reason not to use that? Or to use it? I don't know.
Right. I think, John, for some stocks, I think that's a good indicator.
For when they have a dividend?
I would think
Yeah.
it's for those aristocrats, like those really no revenue but just dividends. But this one may have potential for equity as well. So I don't know if this is the best.
That's also supported by recent market low price too, which is in the same range.
Yeah. Because if you go by the calculation, it's too high. It's 20. It's higher than the price. So actually, I guess I could use.
Yes.
Or if you look at the average high and average low PE, probably you could update according to that.
Yeah.
Oh, sorry. Say that again.
Just looking at the 5-year average, right around 17.
Yeah.
Yeah. And then the high PE would have to go up.
Yeah.
I'm just looking at their stock chart, Joanne.
Mm-hmm. Yeah.
And in March of 2020, when during the crash, I think the stock was around $11, $10.89.
Yeah.
So that low forecasted price might be a bit low.
Oh, too low?
Too low, I think.
You're lower than the pandemic, than the March.
Oh,
That's
well,
what
look,
Cindy was
it
saying.
said low this year, so that had to be.
Yeah, I'm looking at the stock chart, and it's I don't know how they got that number, because the lowest that I can see is
Okay, I
around.
also want to show you something that Adam has been working on. He takes big charts.
Yep.
And he puts so to determine where there's a entry to buy and a entry to sell, or a potential exit to sell. So right now this is the PE ratio. It's down here. It's 11.1.
Which would be more buy, right? Because you want to end.
But I don't know. I mean, go
It's
ahead.
below the average.
Is this a 5-year chart?
Yes.
Okay, so we take this. So we get this chart from Big Charts, and then Adam has, so we paste it into a PowerPoint, and he has this already set up with these lines, and the you just adjust the line according to where the EPS number is, and then you
To
can
find the
tell by
best.
where the chart is, where there's a, and this is something Mike Torbenson showed on his
Yeah.
but he
Yes.
didn't do these lines that Adam.
Well, I just did it because it's easier to look at it.
It's visual.
Yeah.
It's just a
It's
visual.
visual. Yeah.
Right.
The,
Oh, yeah, that's,
Yeah,
the
yeah.
intent is
it's
to,
a good idea.
Right.
I'm
the
just
intent,
wondering, you know, those a few years ago, the PE was so high that I think that's throwing it off. And now the PE's, you know, like something has changed. I don't really know if we can compare the years really. I don't know if that's a fair comparison because the PEs are so
Yeah.
wildly different.
Yeah.
Yeah.
Yeah, so this company is a utility essentially, and they own both wind and hydroelectric and some water utilities that they bought over the years. So going forward, the only way that these utilities can grow is there's some growth related to increasing their prices for whatever it is they're selling, their water or electricity. But they operate in a lot of regulated jurisdictions, and so they will have a cap on how much they can grow their or increase their price rather. So the other way is through acquisition or to build projects, and that's a slow kind of process. They're going to have to take on more debt to acquire or take on debt to build new projects in certain areas. Now, I don't know if they've given any guidance, but if there's a lot of interest these days in renewable energy. So if they're building wind and solar in certain jurisdictions, that may be a positive, but
Yeah.
that's something to look at.
That's their focus, is they're doing the renewables.
Yeah, they reported in Q4 that they're gonna put about 1,400 megawatts of new renewables, which pushes their adjusted earnings from 71 cents to 76. So they do move in that direction of renewables. I guess US with the new presidency is more inclined to go that way too. So I think that's good kind of direction. But as you said, those are not companies that are gonna make huge revenues. They rather, keep the dividends and keep paying dividends, right?
Mm-hmm.
Yep.
Okay. All right. So that's my.
Something that will help these power companies, these non-renewable power companies, is battery storage. As more and more they can store the electricity, maybe it comes from the wind today and doesn't come tomorrow, but more and more with good batteries, they will be able to store it, as I understand it.
No, that's
Thanks.
very true, Bernard. And that's Tesla is trying to get into that business in a big way. So there's battery storage. When you think of battery storage, it's these Tesla walls or batteries that you put in your home, but there's also grid scale storage, which is starting to take hold, and a lot of the renewable utilities, once they get into grid scale storage, I think you'll see them take off.
Okay.
The question would be, what's better to invest in this, the company or the battery companies, right?
Yeah. Yeah.
Because Tesla actually installed one in Texas after all these problems, right? So
yeah.
Okay, we have. Let's move on to our cells. Tom Loftus for Air Lease and Fleacore.
Okay. I can go first.
Well, Tom.
Oh, Tom. Okay, Tom Loftus. Okay, yeah, go ahead. All right.
Okay, can you hear me?
Yes.
Yes.
Okay. Okay, so Air Lease. I struggled with Air Lease. they have no guidance from the company, and nobody else gives a lot of guidance either. But I did go to Manifest, and everybody you talk to from a BI likes Air Lease, and they projected 966. He said it was going to make in the future in the 5 years, and at a price of $77. So that's where I started off with my report, and so it was 47.47 at that time. So we're talking in the 22nd of February. That went along that way, and then just before last Friday, the stock popped to 51.97. It jumped 450. So we're in the first report, it was a hold as far as the portfolio review is concerned. With this 51.97, it's not only the 52-week high, it's the highest it's been in the last 5 years. And it had a 10.8 PE, went up to 11.8. So just, if you look at the quarterly business, it's down year over year, and in the quarter it was down 10% for all the reasons that we talked about. The cash flow, if you look at it, it's all negative. Again, this is just the nature of the business. It pays a lot of its cash flow to cover its debt, and then reducing cash flows for dividends, aircraft acquisitions, and other things. But that's just, you'll find that with any of the companies that have debt have that issue. And possibly that's whenever Joanne looked at Algonquin, again, it's a big debtor. It may have the same issues. And in normal times, it wouldn't be a concern. So the historical rate is 19 and 20, and for historical sales, and the EPS is 24. If you look at the 5-year, it's 10 and 2. But with my projection, I projected at 7 and 6.2, again based on the manifest, what their ideas were. So the pre-tax profit is down. The trend is down. The return on equity is down, and the debt to capital is up marginally. So as far as guidance from is just confirming what they said. They will continue to be negatively impact 2021 operations, and could have a larger impact than reflected during 2020. Air travel will eventually return to historical levels. So some of the problems they're having is the planes they own are increasing, but the planes that they had, they had 99 committed to buy at the end of the first quarter. At the end of the fourth quarter, they only got 361. This is for a couple of reasons. The part of it is a trade dispute between Airbus, who's causing problems for Boeing whenever they try to sell their planes in Europe, and then the converse. Boeing's is doing the same thing to Airbus whenever they try and sell the planes into America. So this causes problems for Air Lease in the sense that nobody wants to take these planes if they're going to get taxed, have a big heavy tax on them. So they have to negotiate with the governments and that. The other problem they have is both Airbus and Boeing, especially Boeing, like some of this less planes is due to the MAX. People are canceling their MAX orders for the planes. Okay, so in some ways this is good news and bad news in the sense that they have less capital expenses than planned, so it gives them more liquidity. As they collect maintenance costs, and people still have to pay the leases to keep the planes. Again, the next statement is the customers don't, or their clients, the airlines don't know what their future schedules are going to be. It's starting to firm up, but they don't know but they still want these planes because they have the low operating costs. ACL is recommending airlines deferring lease payments and extending leases. So again, this is more money for them in the future, but not so much now, which is why their earnings are down. So the other thing is they got a strong balance sheet, and this allows them to buy planes from the people that from the airplane line operators. And this is one way that they will increase the number of planes they own by taking back planes, so the operator, and then giving the operator cash so that they can get themselves started up. The other thing to remember about Air Lease is that Air Lease is not a big leaser to American planes. There's only about 5% of the planes in North America leased by Air Lease. The rest of them, their planes are all over the rest of the world. So I use this 957 for manifest, P of 8, and with this price. So I got an 11.3 annual return, and that was in the middle of February, and then upside downside of 1.2. Whenever the PERT was done, this was reduced to 9.3 and 0.8 with this 51.97. So what this looks like on the chart is this here. And 11.3. So when I did this report, whenever I got the report back from Portfolio Review, whenever you look at Air Lease, there's a lot of their growth is in this early part of the 10-year span that we look at. This area here, the last 5 years, is not so good. So if I get rid of those 5 years, you got a lot different looking graph. And this is what I wanted to share with you. Again, I projected this out to this 950s that talked about by manifest, and this is what the chart looks like. So I had less confidence looking at this that it would grow that much, but there's a combination of things, whether they can get more planes on their balance sheet from their clients. You go to this side with this here, I can get a 92, and I can get a 12% annual appreciation. It's still a hole, but it's above the 10%, or I guess the 9.3 that was projected with the PERT, with that price increase. So this, again, it's down in price a little bit today, but basically it's still $51. I think it's $51.50 rather than $51.96. So that's the dilemma I'm in. I got it on hold, but I think I'm stretching the limits. I don't.
So are you recommending sell then to coincide with your portfolio review?
I guess so. Yeah.
Okay.
Could you show the quarterly graph again, please, real quick? Yep. So yeah, it's been. I mean, it's It's been going down.
Yeah, it was going down before.
Yeah.
If you look at the front, it was going down before.
Yeah.
So how's
Okay.
this industry doing? If you're now leasing planes for airlines, so where do you get your planes?
I guess I don't think there's anything wrong with Air Lease. I don't think it's not going to survive this. I just don't think there's much potential left in it.
Well, I guess
So I just want to mention, this is a, hello, I just want to mention that from a long-term perspective with climate change and stuff, airplanes may someday have to not use so much gas. That's a reality. I've heard airplane managers talk about that. So I hesitate to invest long-term in airplanes. That's my opinion.
Well, I think we have to distinguish this company versus the airlines, right? The airlines typically don't want to purchase too many planes, so they would rather lease them. So this company has a potential that should the travel return and so on, I think they're more like a financial type of company. They buy and lease stuff and rent it to airlines. I think if airlines are to be recovered, and some of them seems to be getting better, then the lease would have to follow. But whether this is gonna generate high returns, I don't know, because this year is probably not as good as as anybody wants to. But
Well, the other issue is, when you look at business travel. So I think there's a lot of pent up demand. People want to go on holidays and so on. We've been locked up for a year, but a lot of people I talk to in business have done very well this past year because their travel costs are way, way, way down. And they're seeing that they don't need to necessarily do business travel as much as they used to going forward. Definitely, you have to go talk to your customers. But, in my personal situation, I was on a plane every 2 weeks going to 6 continents just to meet people that I worked with. I don't think that's going to happen anymore. I think, so you're going to see business travel maybe not recover as much, and that's going to impact Air Lease and it's going to impact the airlines.
Okay.
Can
we quick move to Jay, and then if we have further discussion when it comes to the buying and selling motions, then
I have a quick comment, John, if you let me.
Okay, quick.
Yeah, I agree both with Haney and Tom that, but Tom's projection of Air Lease is 16%, looks like very ambitious. I think if it is some moderate, that's a good company.
Okay. All right.
Not as ambitious as 16%.
Okay. Jay, do you want to do a quick
Fleacore? Okay. Yeah. I'm going to highlight a few things about Fleacore. Obviously, Fleacore does not have a good year because of pandemic. The last quarter revenue declined to about 12% and yearly about 10%. However, they have money. They got more money than last year, more cash. I gave the projection. So I chose 10% for the forecasted sales because of the guidance from the company. The company had a few acquisitions, and I listed in my document. I'm not going to go over that. You can read them. But I do want to show you the progression they made on their quarter to quarter through. So in the past year since pandemic. So, I'm sorry, I wish I could highlight this. So as you can see, the 2020 quarter 1, quarter 2, 3, and 4 last 4 column in blue, and you can see that last 4 quarter and then things are making better gradually compared to the previous month, previous quarter. Excuse me. Still, corporate payment, pull lodging and gift everything. So overall, organic growth is making progress basically. So even though from this is the breakdown in terms of international field, corporate, if they break down by the specific what they call revenue areas, break down a little bit more, even by country, by do they say international, by geography, a little bit. So overall, what I want to point out is that they are making progress. They are getting better. And so even though from the Pert report, it's not as strong as a recommended sell, and I don't recommend to sell. Yes, SSG shows a whole. I do recommend we could challenge this company. And I don't like just to sell. We have something better to present to challenge this company to sell. So right now we are making about 8% return. And so from our club portfolio, we have about what, 68? We have gained the 60% profit. But look at the compound, it gave us 8%. So I haven't mentioned this before. If we sell tomorrow, we got nothing. So I will still say we already have so much cash. My recommendation is we just hold on to it until, for example, next future stock studies, we can find a company to challenge Fleacore. I thought because Fleacore ultimately is still a medium-sized company, they have some growth. It's a technology company, and they acquired a few companies to improve their accounts payable for small to business B2B so it's called SMB, small medium business, to help small medium business. So I'm not sure if I see the huge growth, like it gave us 15% return, but I just felt like I would like to have a plan to find a strong competitor to replace this company rather than just to sell. I want to use the word to replace.
Okay.
You ready? You have a question? Because you're talking. Oh. Questions or comments?
So you don't agree with the or you
well,
agree, but you don't want to sell until we
I
have
don't
a
want to sell because
okay,
you
got it,
sell.
got
We
it.
already
Yeah,
have so
yeah,
much cash
yeah.
already.
I agree. Yeah, we need to start spending our cash.
I think at 8% return, I think that's wise, Jay. Until we can find something better, it's better than zero.
Yeah.
Mhm.
Okay.
Okay.
So we're getting close to the end. Is there any
What's next?
discussion of yeah?
IPR.
No,
Paulus?
I think we're going to move on from the holds and we're going to go to discussion of
Okay.
buys and sells because we're running
Schwab.
out of time.
Schwab. Right?
Oh,
Schwab next.
oh, sorry, I didn't see that.
Yeah? Right? Okay, Schwab. Okay.
Schwab, John Catterson, Schwab.
Hello, everyone. Okay, so I'll go quick. I'll try to at least. We've had a good increase in price on Schwab, you know, as far as money in the bank account goes. The price has increased a lot. For current PE is a little bit above average, 5-year average. The revenue growth, 60%. Now, some of these figures might be inflated. This one definitely is inflated because it includes the acquisition of TD Ameritrade and other these asset and liability figures are also inflated due to the TD Ameritrade acquisition. I talked to some people about how to handle that and didn't really come to a good conclusion, but I'm not sure how to segment them out, but I didn't see it in the annual report. This free cash flow is again due to the acquisition, and this is an explanation of it. So these certain balance sheet items that are used to calculate free cash flow, they all changed greatly, and due to the acquisition, and then their relative balance with each other changed a lot, which is what led to the difference in the free cash flow. So, and purchase of property equipment is what the Yahoo uses, is what I use, but it's not that relevant for Schwab, of course, unless it's like computers and server farms and stuff like that. So I went down to 2.5%, and I can show the Yahoo where I got some of that from. I had a little bit of trouble reading this at first, but then I figured it out. So this figure right here, this percentage is the average estimate minus year ago sales divided by year ago sales. So it's all pretty big right here because of year ago sales being relatively lower. But then when you go to next year, they don't estimate that much of an increase from year to year. And just because of the general climate of discount brokers is what Schwab is, most of their revenue, 60% of it or 55% of it or so, comes from net interest revenue, which is not very good right now. If you don't know what that means they take the interest they give you as the holder of money in Schwab, which is nothing or next to nothing, and then they get interest on loaning money out, which is not much right now with the lowering of the federal funds rate. Now, I don't know how the recent increase in the bond yields, I don't understand that. So if someone else understands that and knows if that could continue upward, that might help Schwab, although that causes chaos in the market. So maybe that will hurt Schwab as well. So that's what I have to say about that. Okay, so earnings forecast, I got this from the preferred procedure, which I'll get to in a second. Diluted shares outstanding increased greatly, which hurt their preferred procedure because they issued a bunch of shares to acquire TD Ameritrade. That's how they acquired TD Ameritrade, by issuing shares. So these are all down. This is good, of course, for debt to capital to be down, but these other two are negative. Okay, they issued these shares, 586 million to cut shares to TD Ameritrade shareholders. They acquired USSA investment assets, not the company, but the investment assets of USAA to be used for their platform. And then I have a couple more notes here. I'll just skip over these though, because you can read those if you want to at leisure. And the recommendation was to sell. I'll go to the SSG, and this is the regular SSG, the one I created. Well, I've created both of them, but the one that I just used my own estimates on. So this is a 2.5 right there, which I guess, of course, you could disagree with. And then this came from the preferred procedure. You can see the shares outstanding. So you see the historical 1435. So if I was to change this to 1435, if they hadn't acquired TD Ameritrade, it would be 5.6 now. So not the same. A little bit better, obviously. Or a lot better, but and then that's, and so their debt to capital is, I already said that debt to capital is down. Current average assets is low for a bank. I'll go over that in a second. But current price to earnings ratio 32.1, so it's a little bit higher than I had in my report because it's gone up, like I said earlier. I put the price to average high PE at 40, just because I don't have a great justification for that. It's just that it could obviously continue going up. So I don't think I want to put it, and I don't think I can put it even at the, well, I could put it at the current PE and just say it's going to stay here or go down. But I put it at 40, which helped it get to higher than it would be. It would be a sell if it was somewhere lower. Look at the low price, I just use this calculation here. So that's that. And that's all the calculations I did. Anyone have any? Well, I'll continue onward because I did recommend a sell. I saw that Joanne changed hers to sell hold, I guess, or sell or buy hold, I think is what hers was.
I have a question with your
sell when I saw that. Go ahead, Jamie.
Your P is average P 26, so you gave 40. That's way too high. But I understand if you put lower, it will be invalid. The reason being is that why do you give earnings only like a 0.5? so low? Like as next 5 years, they are not making any money. Are you saying if you give 0.5 was 2.5, 0.3?
Yeah, I mean,
Why do
yeah.
you?
Well,
So
I
what's
just
wrong
put,
with changing the outstanding share as the current 2020? Why you don't want to use that number? You showed us.
no, I
Diluted
did
share.
use that number. This is the
No,
current shares outstanding. Hurts it.
click on the
What?
diluted shares outstanding on the right.
Yeah.
Why you're not
Using
using 1435?
1435.
I don't know what this
I
is,
think
but it's not
is that
current. Go to the, I mean, look at the financial statement, but this is like before the
Oh,
acquisition. This is the
it's because of the acquisition of TD Ameritrade. It sounds
oh,
like it
okay.
was a stock and
Yeah.
shares.
So you say
Yeah, it was
1858
just
is the
shares.
correct number.
Yeah.
Okay. Oh, I see what you're saying.
Yeah, I can look it up if you want to verify, but not right now. I don't think there's
Oh,
time.
that's okay. I just
There
wondering
isn't
why you
time. I
give
just,
so low on the earnings, like almost to like next 5 years, they're not making any money.
yeah,
That
well, I
is,
mean, I went,
Yeah.
yeah, that's a good question. I guess I just went with this, but I guess I could probably just say that they're probably going to make some money, obviously, and be some net income. It looks like that's going to happen. Schwab's a dominant player in the industry, capital markets for discount brokerage. Better than now that they acquired TD Ameritrade, they're the dominant player in discount brokerage. I just don't know if that's the right sub industry to be in right now. And then the valuation is what
But
really
so what?
doing it. Go ahead, Bernard.
Yeah. So what is their market share in this brokerage stock trading industry? Was TD Ameritrade? What is it, about 40%, 50? What's the market share? I don't know if you know that, but
I
I'd
don't know.
be
That's a good
interested
question.
if you
I don't know,
do.
but
it's on their
I don't know
10K.
that. No.
You can see it. It's on the 10K. You have a graphics. Yeah, we'll tell you the market share.
Oh, okay.
Yeah, I can.
Did they talk anything? I noticed that now they're doing slices. So to attract, I guess, the millennials. So you can just put in a dollar amount and buy a slice of a share.
Mm.
Yeah, they mentioned that in the early portion, but what about it? In probably in here at the business general overview.
Is that affecting their? I mean, is that one of the markets that they're going after?
I'm sure it is, but I don't have much, else to say about
So
it.
isn't it like there's no fees in the States?
Yeah, no fees, no fees.
Which we don't have in Canada.
Right,
We pay like exorbitant fees. So how do these guys make money?
Well, the money is basically through the net interest revenue is how they make a lot of money, and trading fees were before they dropped their commissions. They had gone so low anyway that they were less than 10% of income of revenue. So they were already pretty low. But here it is.
They also derive marginal interest on their marginal accounts.
Oh, it's just the growth rate. Sorry.
They also have some proprietary ETFs, which I'm sure they make fees on,
Oh,
and
yeah.
I'm sure they get some fees from mutual fund companies. You know, there's funds for, and then they have asset management. They have some people pay them to manage their accounts.
Yeah.
Okay, so we're at time. It's like almost 7:30, so we have to do a quick.
I
Thank
felt
you,
like
John.
Schwab is a good company, and they also pay good dividends. I also we had this company for 2 years. 1 year. I don't feel like we have
Not very long. Not very long.
Not very long. We
Okay.
Yeah.
Are there any motions?
How do we get to say what this fact sheet and all this? How did we get to this? I don't know. Is this where did this come from?
This is a
I'm sorry.
10K. This is the 10K.
I don't know.
It's the 10K, Bernard.
This is the annual report that they submit to the government.
Oh, okay, this is Schwab's 10K. I mean,
Yeah.
it's not like, it's not a better, okay.
Okay. So do we have, let's do motions now, if anybody has one.
I have one.
Okay.
I would make a motion to buy $3,000 of Vertex
Okay.
and 2,000 of Biomarin.
Okay.
And
Can you make those two separate in my
In the
iCloud?
time.
I was going to make a third motion.
Oh, okay. And yeah, okay.
And I would sell Air Lease.
I have a comment. Can we just say buy 100 shares or rather than say 2,000, 3,000? Do you think that way we
Sure.
can spend money more?
No,
You know,
well,
instead of-
I think we should do dollar amount because then we know how much is going towards the purchase. I mean, you
Well,
can say
we've done dollars in the past, and then we have to do the math.
Yeah.
So I think we should stick with dollars until we.
Yeah.
Just by
Okay.
that's
Yeah.
just what we've done in the past.
All right.
And then it's
Yeah.
easier to track the expense. Okay.
Yeah.
Okay. So, Hanny, are you done then? Are you creating the oh, is anybody going to second?
I'll second Biomarin and Air Lease.
I'll second Vertex. Sorry, pardon me. Ticker, I have it only. Vertex. Sorry.
So do we have discussion?
Yeah.
yes, for Air Lease, I hold same comment as Fleacore. I think we should be patient. Also, I think we should challenge it. It's still making money for us, and it's not like we need the money or we need the money to sell the stock.
And I think that the two stocks that we're going to buy are kind of long term. I don't think we're going to get immediate returns on those.
I just felt
So
like we shouldn't rush into an Air Lease. We only have for 2 years also. It's not like we're losing money. It's not like it's not
So
performing.
how much Vertex is in the motion?
3,000.
3,000.
Now, are we going to make decisions now, or are we going to wait a
Yeah.
few days,
We're
or how
gonna-
does that work?
We're supposed to vote, right? Like,
Yeah.
is it?
Yeah.
we
It
put
didn't
into
work.
the-
It didn't work last time to
Okay.
postpone it. Let's just do it now. Take care of it.
Yeah, well, they need to be typed into the
Yeah. So
iClub so we can
Hanny's
vote.
doing it.
I'm going to type. Let's do one at a time. My
Okay,
fault.
yeah.
So
Okay.
for any discussion on Vertex, $3,000 to buy Vertex. Any discussion?
I'm skeptical. They're low price, but I just long term I just don't know.
Okay. Anybody else? Okay. So I will.
Yeah, I don't see the catalyst in either of the biotechs.
Me too.
I don't know what's going to grow their earnings additionally.
I'm more concerned with the pipeline. Like, I don't see the pipeline. I know they're gonna keep maybe at current price for a while, given they have the sale, but I don't see how they're gonna generate more.
I would think there'd be actually some upside for Air Lease in the near term. Well, companies probably don't want to buy and commit to planes, so they get more business, but my perspective.
Yeah, I can't remember what my doctor said about biotech. That's why I'm not into it. I feel like it takes, like Tom mentioned too, it takes a long time
And
to go through the trial. Yeah.
the competitive landscape has changed a little bit for Air Lease because there's a big company, I think it's an Irish company called AirCap, which is trying to buy General Electric's air leasing business. So that's going to make them much huger than Air Lease. They're going to be one a big one. Two of their competitors will be merging. Now, I don't know if
Are
that.
they private or are they publicly
Well,
traded?
AirCap is public.
Okay.
And
Well,
this, GE is public, but
yeah,
it's taking part of their business out. So I don't know if that would make things better or worse for Air Lease, but one of their competitors is going to be, of course, that may disrupt their operations too. They may be distracted trying to integrate those operations. So.
Well, should Tom do a competitor, like a challenge, compare with that competitor to see if that other company has some potentials?
I guess the other question would be, do we want to be in that industry, like the airline type of industry? Do we see that industry as a future?
We should ask Ron. He worked at airline. Oh, is he still there? Yeah, he is. Our guest.
For the Fleacore, did you guys wanted me to go through that reviewer thing or no?
We don't have time this time.
We don't present the reviewer. So that's just between you and the person that's doing it. The reviewers should talk to the person presenting before the meeting and give them any advice.
But I
No,
think what
I
he's
know.
saying,
I was
Hanny,
referring to
he
the
made a nice
template.
form to help. So I think that, but we don't have time this time, Adam, to do it. So maybe we can do it through email.
Okay, so in terms of Air Lease, I think that the price has gone up quite a bit. We made pretty good money on it. I'm not convinced that going forward, given their debt level and their free cash flow, that they'll be able to to turn things around in the next couple of years. I think it's going to take a while to get back to profitability.
Was it based on Tom Loftus' SSG and his projections? It still can give you 15% returns next 5 years.
Yeah, I can make an SSG come out to any number that you.
No, not
like.
any number. It's his research.
Pretty much.
I don't think. No, say I have to agree that John Callison, yes, he did a number to make it look like hope, but I don't think Tom Loftus' number was some random number to make it as a return look like a 15%.
I didn't say it was a random number. I just said that I think that the SSG is you're putting numbers in, but the story behind it and how the market is behaving is what's going to drive the business. And I just think that with airlines, I don't see going forward, and it's the same with I don't think Disney is going to do that well because the parks are not going to go back to the levels that they were before. So I think the price has already been factored in as far as these people are expecting that things will improve.
I actually disagree with you, Henny. I disagree with you with Disney. Actually, I also want to recommend to buy Disney. I disagree with you on Disney's parks that right now obviously has impact. As I mentioned, in China, Disney was packed a couple months ago.
So
but you know what? I can't.
Go ahead.
Disney's not. Well, it's crazy to buy Disney at this time and this price. Every researcher recommends it's overpriced. I don't know.
I don't think we made
I
an
can't see
emotion about Disney. Let's
myself
talk
at
about.
Can we focus on the motion?
We're already over time here.
Come on, focus on the motion. It's Air Lease. Are we finished with discussion?
Well, the only thing I would add on early is that I don't know if it's priced in. I mean, the optimism that a bit the travel, whatever will come back, may bring the price a bit higher. So holding it a bit longer may create more gains, but how much more, hard to tell. At the same time, if we have a good alternative, it's good to sell, but I don't know if we have a good alternative.
Well, that's why I
Okay.
say, well, there's no rush. We need the money to, why do we just wait to find a company to replace Air Lease rather than
So
to sell it?
this is sort of a monkey wrench, but so it seems like we're rushing the discussion. And I know the voting didn't work, but my thought was that we make the motions now, we have a week to discuss, then at the beginning of the next meeting, we vote, not vote over the weekend, but
Well, we didn't discuss over the, it didn't work. Nobody discussed anything over the
okay.
weeks. We
Well,
need to
because,
put,
yeah,
yeah.
but we have all these, you know, sell. Well, we even changed our minds during the meeting, and then I feel rushed in voting. Anyway, that's just my 2 cents. But I'll vote. I voted on this one.
It was rushed. I felt like we just sell so frequently and so often, and I just feel like we are not a long-term. I don't feel like we are a long-term investor. We just sell when things do not go the way we wanted temporarily, because obviously we don't know, right? Nobody can predict the future. I just felt like we should have some patience during this, especially this time, the
And
pandemic.
also, I think we need to spend some time looking at our sell history to see what cells worked for us, where we, and what cells actually, you know, where they continue to make money, but we sold prematurely.
Oh yeah, we have a few. Well,
Yeah.
John, since we are looking at your screen, you can pull up the accounting, the reports right now to show us.
Well, we can do that another time. Let's take care of Air Lease.
Okay, well,
What about,
BioMarin is showing now as current motion, but Air Lease is not
Oh,
showing as a current motion.
oh, okay.
Wait, are
so
we voting too, or we just discuss and
Yeah, we're
vote
voting
after?
too.
Oh,
Well, if we don't want to sell, we can say no.
Yeah.
Yeah,
yeah,
you have a discussion and then you vote.
yeah.
We don't,
Okay,
this
so
could,
the motion up now on the screen is BioMarin.
Okay.
So are these going into the speculative buys?
Oh,
The
well,
primary?
yes, highly speculative.
Okay.
right, 2000.
no one seconded the Air Lease motion. So if it can die right here.
Okay.
Tom did.
Yeah,
Oh,
well, I think I seconded it.
I'd second it.
okay.
So, but BioMarin, I think it has potential if they get their drugs approved, but it's these biotechs, like Reddy was saying, it's sort of like playing poker. You know, they're hoping to draw good cards, but we don't have anything on the table now.
Did someone second Air Lease? Sell?
I did.
Okay, all right.
I just sent it.
Oh, okay.
I just want to bring to your attention that pre-pandemic price for Air Lease is lower than 50. I'm looking at the historical price, share price right now. So based on that, I will go for a sell.
Sorry, Jane, I didn't hear what you said. You said the
Okay.
pre-pandemic is
The price for Air Lease pre-pandemic is lower than 50 when I'm looking at historic sales price right now. So I agree the future is not as optimistic as before for Air Lease. So I will go for sell.
Why do you say the future is not better than now?
Because of all the factors that I agree with what Haney mentioned. And I think the travel pattern may have changed. And I agree that people may lease more aircraft than buy. But all this, I just feel that there's a possibility that the share price may not advance too much higher. It may advance for the short term.
Do we make money on this one? Or was it Fleacore that if we sold now, we would make zero? Or was it Air Lease?
At least we're making money.
We make money.
We had this company for 2 years, I believe. We bought 2019, if I remember from Tom's report.
So we've made money.
We are
Yes,
not. Yeah, we are projecting 5 years. When we're doing projection for sales earnings, but we are not hold on for 5 years. Not 2 years we sold. We cannot even to show us whether our prediction is good enough.
I think so. Okay, that's fine. We can just vote based on what you think. But one thing I'd like to point out, and that is, Jay, I agree with you that when we sell these things, we should have replacements and we should challenge them. But the number of stock studies that we're doing is not very many. So I think somehow, if we're going to start challenging, we need to do more stock studies so that we can bring something that we can replace companies with. So this is more of a sort of
Also,
just more of an organizational issue again, because we have limited time in these meetings. So we're running up against time over and over again.
I have a suggestion. If somebody has a cell that they put together a challenger for that stock, so it doesn't have to be a stock study. I mean, a stock study group. So you would do another stock study for the challenger for that stock, since you already know the industry and the competitors.
Actually, too, we don't have to always buy a new stock. We can buy some of the stocks that we already have.
Yeah.
You can go up to 20% in an individual stock, like Qualsys. They had an annual report scheduled for today, but we never got to hear it, or some of the others. But we don't always have to buy new stocks. It could be ones we have that they're doing well, and we want to expand on them. Yeah. Okay. Thanks.
Okay.
Joanne, where would we find the time for that? The plan you mentioned, where we have the time to do that? I mean, someone would present their sell and then present their company to replace at the same time in the same meeting.
And there might not always be one, like in
We
this
also
case.
had the concept of the watch list. I guess we need to start populating that.
Yeah.
Maybe those will be the candidates that we would pull from.
Okay. So maybe we can have this conversation offline through email.
Yeah.
If people have suggestions about how we deal with that. But I think just for the sake of time, we should probably get to our guests.
Yep.
And I made all of the motions to end when majority is reached, because I usually forget to click that button. So we still have time to think about it if you're still undecided. Okay.
Okay.
Okay.